Introduction of binary option trading. What is binary options? A binary option is a financial product where the buyer receives a payout or loses their investment based on whether the option expires in the money. Binary options depend on the outcome of a yes or no proposition, hence the name binary. Binary options have an expiry date and/or time. At the time of expiry, the price of the underlying asset must be on the correct side of the strike price based on the trade taken for the trader to make a profit. A binary option automatically exercises, meaning the gain or loss on the trade is automatically credited or debited to the trader's account when the option expires. These times can range from 30 seconds and 1 minute turbos to a full day, end of day, and even up to a whole year. As an intraday trader though, you will be more concerned with trading 5 and 30-minute binary options. Opt for binaries with 1-minute expiry times though, and you have the ability to make a high number of trades in a single day. Binary options set a fixed payout and loss amount. Let's say the trader thinks the price will be trading above $25 on that date and time and is willing to stake $100 on the trade. If ABC shares trade above $25 at that date and time, the trader receives a payout per the terms agreed. For example, if the payout was 70%, the binary broker credits the trader's account with $70. If the price trades below $25 at that date and time, the trader was wrong and loses their $100 investment in the trade. Binary options are a derivative that can be traded on any instrument or market. They appeal because they are straightforward. You can trade binary options on commodity value, such as aluminum and crude oil. You can opt for a stock price, such as Amazon and Facebook. There are foreign exchange rate options, including all the major and minor pairs. Even cryptocurrencies such as Bitcoin, Ethereum, and Litecoin are on the menu. Types of options. There are a number of different option types to choose from. The most popular types are listed in the brief glossary below. Up-down, high-low, the most simple and prevalent binary option. Will the price be higher or lower than the current price when the expiry time comes? In-out, range or boundary, a high and low figure will be set. You are then making a determination as to whether the price will finish within or outside of these boundaries. Touch no touch, levels will be set that are either higher or lower than the current price. You then enter a position as to whether the price will touch these levels between the time of trade and expiry. Payout will come as soon as the touch takes place. Ladder, these are similar to up-down trades. However, instead of using the current price, the ladder will have predetermined levels that are staggered up or down. These normally demand a substantial price move. The flip side of this is returns will frequently exceed 100%. Although it is worth noting, both sides of a trade are not always available. Advantage. There is a whole host of attractive benefits to trading with binary options. The greatest advantages have been outlined below. Simplicity. Because you are making a determination on only one factor, direction, your bet is straightforward. The price can only go up or down. You also don't need to concern yourself with when the trade will end. The expiry time takes care of that. Whereas in other markets, you may need a system to limit your losses, such as a stop loss. Fixed risk, trade stocks, gold, and crude oil, and you've got a vast number of factors to contend with, from slippage and margin to news events and price requotes. With binaries, your risk is kept to a minimum with far fewer parameters. Trade control. Because you know what you may make or lose before you enter the trade, you have greater control from the start. Trade in stocks, for example, and you have no guarantee that your trade will make the entry price. Profit potential. Compared to other trading, the returns in binaries are extremely attractive. Some brokerages promise payouts of up to 90% on a single trade. If you're looking to make simple trades with large profit potential, binaries could well be worth a look in. Choice. Rather than being constrained to a specific market, for example cryptocurrency or stocks, binary options give traders the opportunity to trade instruments across virtually all markets, allowing you start currency, indices, and bonds trading if you so wish. Accessibility. In the binary options game, it's always the best trading hours somewhere on the globe. So, you can log in at night, or on the weekends and join the groups of avid traders attempting to turn daily profits. Real-time charts are available for every market, so if you've got the time you can invest 24 hours a day. Disadvantage. Whilst there are plenty of reasons to delve into trading on binary options, there remain several downsides worth highlighting. Reduced trading odds. Whilst you can benefit from trades that offer in excess of 80% payouts, these are often when the expiry date is some time away from the trade date. If the odds of your binary trade succeeding are extremely high, you may have to make do with reduced payout odds. Limited trading tools. Whilst most brokerages offer advanced charting and analysis capabilities, trading tools for binary traders often fall short of the mark. Fortunately, there are other online sources for these graphs and tools, plus brokers are working swiftly to increase their offerings. Price of losing. Your odds are tilted in favor of losing trades. Approximately for every 70% profit, the corresponding loss of the same trade would result in an 85% loss. This means you need a win percentage of at least 55% to break even. Risk management. Unlike other markets, brokers often set a trading floor, with minimum accounts a trader needs to enter the market. This means losing capital can happen with ease. Whilst a stocks broker may permit you to open an account with $250, trading micro lots, most binary brokers won't allow $50 trades. So, even with $250 in your account, just 5 trades that don't go your way could see you sink into the red. How to trade binary options. Trading binary options for beginners is straightforward. Simply follow the steps outlined below. Step 1. Find a broker. This is one of the most important decisions you will make. You need the best binary options broker that meets all your requirements and who will enhance your trade performance. But with so many options out there, how do you know what to look for? Step 2. Choose an instrument market. You can trade binaries in pretty much everything, including stocks, forex, indices, and commodities. You can bet on anything from the price of natural gas to the stock price of Google. Opt for an asset you have a good understanding of, that offers promising returns. Step 3. Decide on an expiry time. As a short-term trader, you'll probably be more interested in 30 seconds, 1 minute and end-of-day expiry times. You need to balance binary options trading volume with price movement. Whilst the more trades you make means greater profit potential, it's better to make fewer and more accurate trades. Also, find a time that complements your trading style. Step 4. Decide on size. In the binary options game, size does matter. The greater your investment, the greater the possible profit. On the flip side, remember the entirety of your investment is on the line. You need an effective money management system that will enable you to make sufficient trades while still protecting you from blowing all your capital. Step 5. Choose an option. You will have any number of the options outlined above to choose from. Think carefully about how confident you are in your determination. Consider factors that will jeopardize your investment, and select an option that gives you the best chance of succeeding. Don't automatically select a ladder trade because you want huge returns. Consider which options are the relatively safe bets. Once you've made that decision, check and confirm your trade. Then you can sit back and wait for the trade payout, Strategies. Binary trading strategies will differ from trade to trade. What may work for a ladder option in Forex may prove useless in a range option on gold. Having said that, there are two reasons you must have a strategy. Firstly, a strategy prevents emotions interfering in trade decisions. Fear, greed, and ambition can all lead to errors. A strategy allows you to focus on the maths and data. Secondly, a strategy allows you to repeat profitable trade decisions. Once you've found out how and why that binary option worked, you can replicate it to create consistent profits. Learn technical analysis. Technical analysis is the study of historical market data, including price and volume. Using insights from market psychology, behavioral economics, and quantitative analysis, technical analysts aim to use past performance to predict future market behavior. The two most common forms of technical analysis are chart patterns and technical, statistical indicators. Technical analysis attempts to predict future price movements, providing traders with the information needed to make a profit. Traders apply technical analysis tools to charts in order to identify entry and exit points for potential trades. An underlying assumption of technical analysis is that the market has processed all available information and that it is reflected in the price chart. What does technical analysis tell you? Technical analysis is a blanket term for a variety of strategies that depend on interpretation of price action in a stock. Most technical analysis is focused on determining whether or not a current trend will continue and, if not, when it will reverse. Some technical analysts swear by trend lines, others use candlestick formations, and yet others prefer bands and boxes created through a mathematical visualization. Most technical analysts use some combination of tools to recognize potential entry and exit points for trades. A chart formation may indicate an entry point for a short seller, for example, but the trader will look at moving averages for different time periods to confirm that a breakdown is likely. Building a strategy. There are two crucial elements to your binary options trading method: creating a signal and deciding how much to trade. The second is essentially money management. How do you go about determining these two steps then? Step 1. Creating a signal. The signal will tell you in which direction the price is going to go, allowing you to make a prediction ahead of time. The two main ways to create signals are to use technical analysis and the news. Step 2. How much you should trade. If you're just starting off, it's often best to keep things simple. Trading the same amount on each trade until you find your feet is sensible. Practice and demo account. It is crucial to learn how to use the features of a binary options platform before you start trading on it. Fortunately, traders can test out each platform using a demo account, which means no real money is at risk. Here, we'll discuss the importance of demo trading and let you know what you should look for when trying different platforms. Every platform is different, so even experienced traders need to learn how they work before trading with real money. It is generally a good idea to place at least 50 demo trades to figure out how crucial features work. Binary options demo accounts can also help traders to learn how good platforms are at recording transactions for tax purposes. Demo trading is not the real thing, but it can help traders prepare for using live accounts. Systematic trading plan. Systematic trading, also known as mechanical trading, is a way of defining trade goals, risk controls and rules that can make investment and trading decisions in a methodical way. Systematic trading includes both manual trading of systems and full or partial automation using computers. Although technical systematic systems are more common, there are also systems using fundamental data such as those in equity long and short hedge funds and TA funds. Systematic trading includes both high-frequency trading (HFT), sometimes called algorithmic trading, and slower types of investment such as systematic trend following. It also includes passive index tracking. The opposite of systematic trading is discretionary trading. The disadvantage of discretionary trading is that it may be influenced by emotions, isn't easily backtested, and has less rigorous risk control. Repeat the above process till you earn a consistent profit. Trading is all about long-term. So, plan accordingly. Thank you for watching. Follow us on Instagram, Facebook, Twitter for free signal and tips. For further videos and updates, subscribe this channel. If you like this content, share this video to your friends. Comment below on which topic you like to have the next video.